Hello, welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Let's review the fourth trading week of 2024. Even though we're still seeing some markets looking really strong, like the local boss here, we're seeing some weakness in other markets. But first off, let's review the global markets now. We'll start with Europe, where stocks closed a two-year high on Friday as investors digested the European Central Bank's latest decision. Fresh economic data and fourth quarter earnings. The pan-European stocks 600 closed about 1.1% up there. We see FTSE, that was up 1.40% to close. And the DAX in Germany, that was up 0.32%, while the CAC 40 was up 2.28%. Over to Asia now. We see Asia Pacific markets mostly declined on Friday as electric vehicle stocks in the region dropped for a second day, while investors also looked at inflation data from Tokyo. Hong Kong listed shares of XPeng and Li Auto fell over 4% each, and we see the Nikkei there down 1.34%. The Shanghai Composite, that was in the green, 2,910 points, up 0.14%. Let's take it on to the U.S. now. We see the S&P 500 closed slightly lower on Friday, but clinched a weekly gain as latest economic data added to a positive picture of the economy. The broader market index inched down by 0.0%. We see the NASDAQ there down 0.74%, 17,504 points, while the S&P 500 was down 0.21%. We see the Dow Jones marginally up about 0.09%. All right, let's bring it home now. We see the Nigerian Exchange Limited All-Share Index and market capitalization appreciated by 8.32% to close the week. Ended Friday. We see January 26th there. That was Friday, 102,401 points, above the 100,000 mark to close the week. We see the market cap 56 trillion. And the year-to-date performance now, 36.95%. in 1 month. Incredible. The market recorded a total turnover of 2.98 billion shares worth 57.87 billion naira in 67,962 deals. That's what we had for the week, lower than what we had in the prior week. In the review trading week, all other indices finished higher. Looking at sectoral performance now, just the banking and insurance counter were down, with industrial goods counter the biggest mover, up over 20%, 23.20%. And oil and gas following closely, 11.57%. Triple G and Company led the gainers counter, closing at 2 naira 83 kobo, up 32.24%, while Veritas Capital that closed at 59 kobo for the week, down 23.38%. The trio of Transnational Corp PLC, United Bank for Africa, Sterling Financial Holdings Company PLC, those were the top trades for the week. All right, let's look closer into this now, seeing that the all-share index has already delivered over 30% profit in 1 month. Is this a bubble about to burst? Let's discuss more now and other investment matters with Okechukwu, Ekene Okechukwu, Regional Head, Asset Management. That's the South for Northern Berger. Great to have you on the show. Good evening.
Good evening. Thank you.
Yeah, so we're seeing investors having to deal with currency devaluation and inflation, the double whammy of both, at this time. We're seeing the local equities market hitting new highs. But talk to me now, are equity investors really winning in this market?
Okay, thank you. So what we've noticed is that Nigerians have continued to experience devaluation of naira and increasing inflation in recent times. But interestingly, the equities market has continued to record some gains, and investors who invested in these stocks with strong fundamentals have continued to smile to the bank. Putting this in context, the Nigerian equities market recorded a 45.89% growth in 2023, compared to 19.98% growth recorded in 2022. This year alone, the equities market has grown amazingly 36.61% year to date. and this is it has made our stock exchange the world best so far, in 2024, and that's an amazing feat. But this growth didn't just happen. On one hand, it reflects the positive sentiment investors have about the bold reforms of the current administration. It also speaks to the growth, driven by reforms in oil and gas sector, and remarkably in the banking sector last year. For this year alone, major catalysts that has actually been pushing the market are, the prospects of the Dangote refineries, and also the planned banking recapitalization by CBN and other corporate actions. So these are things that have actually given some impetus to the markets to grow in recent times. Thank you.
Talking about growing in recent times, talk to me about this rally we're seeing right now. Do you think this market has the liquidity to actually back this rally?
Okay, when you talk about liquidity, you're talking about a ready market of buyers and sellers. And I would say that our stock exchange has recorded huge success with that. Interestingly, there's been a renowned interest from sector actors, foreign portfolio investors in our market. And both on the side of the government has realized they can actually attract FDI through the stock exchange market. For the corporate world, also they have seen that they can actually access cheaper funds through the stock exchange. And also on the side of the investors too, they have seen the stock exchange as an avenue for wealth creation, democratization of wealth, and also having a stake in improved performance of quoted companies in Nigeria. So this improved activities has actually given some impetus to the market, and that's why we are seeing this rally in recent times.
And definitely, if you're not invested in this market, you definitely have that, feeling of FOMO, fear of missing out, at this point. What would you say to investors that have been on the sideline, all through this rally? What would you say, if they're feeling like, what, I think I want to have a piece of this cake and maybe jump into the market at this time? What would you say to such an investor?
I must sound some caveats here. In as much as the market looks attractive, looking at the record highs in recent times, there must be some caveats in terms of equities market. The risk is still there. There's a high risk of also having some serious losses. And on that vein, what I would advise, or what we would advise, is that before you engage this market, try to engage service of professionals who would advise those stocks that are fundamentally strong to invest into, that has good growth prospects. There's intrinsic value to stock and there's the market value. So they have to also analyze that and give you stock whose intrinsic value are there to promote growth, and improve return on investment in the short run.
And every week, when we report this market, somehow at the back of your mind, you're expecting some kind of pullback, at some point. Talk to me now. Most analysts have said this bubble is going to burst really soon. But what are you seeing?
I would say that, interestingly, we've actually seen stronger likelihood for more bullish run. A very good example is the bold steps taken by the current administration to take some.
All right, it looks like you're frozen there, but definitely we're talking about, the current rally, in this market. Definitely, we know the feeling of FOMO is real, in any market. When you're seeing a very bullish market, there's always that feeling like you don't want to miss out and you want to get in there. I've been talking to Ekene Okechukwu, and he's saying you need to exercise caution, before jumping into a bullish market. But we're going to try and get Ekene back. It's definitely frozen, at this point. But let's look at some other issues now quickly. We see the Chartered Institute of Bankers have held its 10th National Economic Outlook with a focus on implications for businesses. in Nigeria. The event was held in Lagos at the headquarters of most companies, had a rich conversation on the possible direction of the Nigerian economy. Take a listen.
It's still a season of economic outlooks for the year 2024. The Chartered Institute of Bankers is contributing to the conversation with a tilt to impact on businesses. The experts in related fields are in attendance, but also are the youths. Exposing them to the realities of doing business in Nigeria is the intention.
This step was necessary.
President of CIBN, Mr. Ken Okpara, joins virtually. He welcomes the panel and other attendees and leaves the floor for discussions. The tone is set by the Director of Monetary Policy at the Central Bank of Nigeria, Dr. Mohammed Tumala, who represented the Deputy Governor Economic Policy. The forecast from the CBN is optimistic for 2024.
The mining, electricity, gas and water supply subsectors amounted to 58, 52, 51, and 69 index points, respectively, indicating, of course, a positive trend.
Then the panel takes over. The outlook is not positive for some of the panelists.
If you have a material increase in cost of lending or cost of credit, what you are going to witness is that these sectors, which I have mentioned that are growing at very slow rates, will not be able to generate the kind of cash flow that will enable them to be able to meet their interest payment obligations and talk less of loan principal repayment. So you're going to have increase in default.
2024 should also be a year to look closely at the gas sector.
Nigeria's potential for gas, value-wise, is greater than what we extract from crude oil. And over decades now, not years, instead of, let me use the word everyone understands, is the capturing the gas, we flare it. And then, of course, we had investment in LNG, as you said. And what we have done so far is expropriate 48% of the capacity, which means we still have unused capacity to start with. Secondly, even what we produce oftentimes, in actual fact, has been budgeted for 25 years.
However, there are strategies for way forward.
People talk about comparative competitiveness. Okay? That's what it should be. Comparative competitiveness. Because comparative advantage is not it anymore.
It's the good and not so good, and the participants have to study both sides for progress.
We are seeing some very good policies, from government. And I think what I will advise is really look at policies that have worked. We have quite a number of policies that have worked and learn from them, okay? And look at policies that have failed and essentially just drop them.
For CIBN, the success of the event is not enough. Following up for implementation is next.
Well, there you have it. Everyone getting an outlook for 2024. How's the economy going to fare? And definitely that will impact, the stock market. But we'll take a break now. When we come back, we'll continue the conversation. Do stay with us. Welcome back to watching Capital Market Live on Channels Television. Well, the governor of the Central Bank of Nigeria, Dr. Olayemi Cardoso, believes the naira is currently undervalued. Dr. Cardoso was speaking virtually at the launch of the Nigeria Economic Summit Group Macroeconomic Outlook, where he shared the regulator's optimistic projection for the country in 2024. According to him, the central bank is working with the fiscal authorities to forecast to grow the year's GDP at 3.76%.
Foremost among the factors contributing to this positive outlook is the expectation of improved crude oil prices and production, highlighting the crucial role the oil industry is expected to play in driving economic growth. Inflationary pressures are expected to decline in 2024 due to the CBN's inflation targeting policy, which aims to rein in inflation to 21.4%. This will be aided by improved agricultural productivity and the easing of global supply chain pressures. We believe that the naira is currently undervalued, and coupled with coordinated measures on the fiscal side, we will expedite genuine price discovery in the near term. We are implementing a comprehensive strategy to improve liquidity in our FX markets in the short, medium, and long term. Our focus is on addressing fundamental issues that have hindered the effective operation of our markets over the years.
All right, that was CBN Governor there. Well, let's try and get back Kene Okechukwu, Regional Head Asset Management, that's the South-South, Norimberja. Great to have you again. You did freeze on me the last time. Thank you for staying on.
Hey, I'm good to be back. I had some network glitch, unfortunately.
Yeah, I know that it happens with virtual interviews. But let's. You did hear the CBN governor there, and he's quite optimistic about inflation cooling, and the naira. We're seeing some stability, in the FX market. Do you share the same optimism?
Yeah, I do share in that same optimism. If you notice, what we have noticed in the inflation is not a function of monetary factors. It has underlying roots in productivity. Productivity has been overwhelmingly low in especially in the agricultural sector. So we believe, and I also share that sentiment with him, that with an improved agricultural productivity, and of course with the prospects of like you mentioned, like what you just played now, with the prospect of our public refineries coming upstream, the Dangote refinery also supplying fuel to the economy, we believe that the cost push effect of the inflation will be reduced, and that will ultimately affect other fundamentals in the market, including goods and services. So I share in his sentiments pretty much. Thank you.
Right, and definitely at this time, some investors are still sitting on cash, right now. And while you sit on cash, definitely currency devaluation is eating into, the value of the money you're holding at this time. And at the same time, you're trying to beat inflation. You're trying to beat currency devaluation. Talk to me about the best strategy for an investor in 2024 to beat this two heavyweights.
Okay, thank you. Looking at the increasing cost of living, this is not the best time to maintain cash, unfortunately, because as those cash are being kept idly, they are on a daily basis losing value. So fortunately, our investment market has evolved such that depending on the financial goal of an individual, you can actually invest in shorter-term money market instruments, such as the treasury bills, the money market fund, the dollar funds, that can easily be turned back to cash in case of emergencies or exigencies. On the longer end, you can also invest in longer-term fixed income securities like bonds, equities, and ETFs. So this is not the best time to actually have cash just idly buy. Thank you.
All right, but for you, what's the best strategy when it comes to FX? Because we know some investors, at this time might be looking at investing in dollar-denominated assets at this time might be a better way to beat currency devaluation. How are you seeing that?
My best advice to investors seeking to hedge against inflation and currency devaluation is to maintain a balanced portfolio of investment that is well diversified. This way, investors tend to enjoy the right mix of benefits that abound across different investment classes. Especially for we at Norimberja, we have various products that speaks to this. We have the Norimberja Turbo Fund and the Norimberja Dollar Fund, which helps investors with such diversification. The investor can also take advantage of the rally, just like we discussed some moments ago, experienced in the equities market. However, like I said, the caveat remains to engage the service of a professional to know those stocks that have intrinsic value and have strong fundamentals for the future. Our team of professionals are always on ground at Norimberja Securities Limited to offer such professional services to interested investors. Thank you.
All right. So data from the Nigerian Exchange Limited shows the stock market facilitated raising of over 3.85 trillion naira by government and corporate entities to finance various projects. How are you seeing this number?
Just before we kick-started the interview, you gave a preview of the market, just ending on Friday yesterday. And what we've witnessed is that the market actually increased. The all-share index increased by 8.32%, week on week. And that's a very huge growth pattern. And this pattern has continued, 2023 through to 2024. So for me, it's a pleasant surprise because it goes to show how matured our equity market has grown over the years. It has increasingly been embraced by government, by corporate entity as an avenue to attract both foreign direct investment, foreign portfolio investments, and also cheaper funds on the side of the corporate. On the side of investors, they've been increased embrace of that market as well, because they've seen it as an avenue to grow wealth. So I think the numbers are actually fundamentally strong. There are right purposes or right reasons for those bullish growth, but the caveat still remains to always engage the service of the professional before you buy into those stocks. Thank you.
All right. Okay, so we're expecting the first MPC meeting of 2024. That's coming up next month. How are you bracing for this, when it comes to advising your clients on, how to invest, at this time? And we also have the MPC External Committee. We hear that that's not set up, at this time, knowing fully well that the meeting is coming up next month.
Yeah, that's been an interesting development in the CBN, and I don't think it cannot be taken away from the fact that there've been an wild reforms going on in the CBN right now, and that has also affected the composition of the MPC. They have a meeting coming up in February 23rd and 24th, and it's their tradition to have that first MPC meeting every year. However, like you mentioned, the external members are not yet. They've actually been on the sideline. The CBN is actually keeping them on the sidelines, and there've been increased, reactions or concerns as to what happens, because truly the MPC actually needs just 6 members to form a quorum, and without these external members, the quorum can still be formed. However, the reason why we should have an external member to that MPC is to give a balanced, position on any policy that is being brought out. It gives legitimacy and balance of policy direction. So I think it's a concern that has to be addressed on or before the next MPC meeting. And a Bloomberg report actually reported that there are plans. A representative of CBN who spoke on anonymity assured that there were plans to actually appoint new independent members to the MPC. So that remains to be seen in the days and weeks to come.
All right, we'll definitely be tracking that here. But talk to me now. A fresh new week starts next week. What are you seeing for the market?
I didn't get that. Come again, please.
Yeah, what are you seeing for the market next week? We've seen it's been all bullish movement, this January. Do you see some profit taking coming up anytime soon? What do you see for the markets?
So in the last few weeks, there have been some sectors that have actually shown some strong performances steadily. We're talking about the industrial goods, the consumer goods, the oil and gas sector. The banking sector has been in and out of that region. So we expect that this bullish sentiment might continue. However, there are 2 major activities that are going to happen in the capital markets next week. There will be the FAC allocation, and there will also be the bond issue. So we expect the market to react to availability of liquidity in the market. We are expecting a set-off actually, because while the FAC implies some fresh fund into the market, the bond issue also, takes back that into government financing. So it's actually a mix of activity. I would just advise that if you are not a specialist in the market, you actually just be on the sideline and wait for concrete advice on what step to take, especially in the stock market.
All right, I guess when in doubt, just sit on your cash at this point. Thank you so much for coming on, Kanel Kechuku, Regional Head, Asset Management, Southside of Norimberga. Thank you so much.
Thank you.
All right, that's the show for today. Thank you for watching. You can watch this again on our YouTube channel. Just flip over to YouTube and search for Channels Television. I'm Ladi Williams. And remember, if you must sell, find the top.